HIMS is up 48% this week, and it's definitely not done. I'm going to be breaking down the secret on why HIMS investors should be very excited for the next years. I'm also going to be going over why is the stock market at all-time highs. The NASDAQ just did something it hasn't done since 1992. I'm going to be breaking down what happened last week as well as what you should expect next week in the stock market. I'm also going to be breaking down my $100,000 stock market challenge. This is week 46. Let's get into it. If you can give me a like and subscribe, I really appreciate it. Let's get into it. 48% HIMS, still more room to run. I have two reasons. Number one, the technicals of just how the chart looks. It's still down 54% in 183 days. We're talking after the 48% in the last 5 days. It was at $14, $15, and now it's at 28. So it's up 100% since the Novo deal. And yet, even after all of that, it's still down 54% in 183 days. It still has room to run. Also, the second, well, not the second thing, this kind of goes into the technicals of the chart. We have a lot of shorts still out there, even after the Novo deal and after some other news that came out that I'm going to explain. Still a lot of shorts out there. So, one thing happened recently. And this is what's kind of confusing me. I think the shorts are going to really get blown away in a few months because CEO Andrew Dunham just admitted exactly what HIMS is going to be up to in the next year, at least 1 year.
We launched GLP-1s and everyone said, oh, now you're just a weight loss business. And, you know, a year from now, people will say, oh, you're just like a peptides business, probably, if I were to take a guess.
So Andrew Dunham basically admits, hey, we're going to be a peptide company, right? So on Wednesday, the FDA convened a group of independent advisors to recommend whether to allow compounding pharmacies, HIMS, to manufacture certain peptides. As many as 14 such products that the agency removed in 2023 are going to be up for reconsideration. 7 of those peptides will be, there's a meeting scheduled for July 23rd and 24th. So that is big. If they say, yes, those things are going to be legal, HIMS is going to boost up again, at least from wherever it is. I don't know if it's going to be in the 20s, in the 30s, in the 40s, in the 50s. I don't know where it will be. But on July 23rd and 24th, when the FDA comes out and they say, we're going to allow pharmacies to compound these peptides, I guarantee you HIMS is going to go up. Another 5 will be reviewed at a future meeting in February 2027. That's obviously almost a year from now. But as of mid-April 2026, there is a high likelihood that the classification of several peptides will be reversed from category 2, which is obviously makes them illegal to compound. So it signals about 14 of the peptides. So again, we're talking over the course of the meetings, will be moved back to category 1, which allows them to be legally compounded. Now, why peptides are the future? If you don't know this, I'm going to kind of go over this really quick. Peptides are really huge, medically very important. They have precision targeting. They mimic natural signaling molecules. And then binding to specific cell receptors with high affinity and just like high precision and very few side effects. Because they are made of amino acids, the lower toxicity. Because they're made of amino acids, the body breaks them down into harmless, natural components, unlike some chemical drugs. Then you also have faster development. Peptides are often easier and cheaper to design and produce rather than the large protein. So, right, that just makes it everything easier from the business side and the natural side. Also, the oral delivery, taking it by pill. Right now, a lot of peptides are being injected. So if you have something like the oral semaglutide, the GLP-1, all that, that helps, and it's possible. The reason is the stomach digests peptides like food, so it's not the same. So you need different stuff when you're taking the pill, and it doesn't work as good. But scientists are developing smart capsules that can mechanically inject the drug into the intestinal wall. So they're coming up with new technologies to make it more easier and possible to do. Also, neurodegenerative diseases. Peptides are actually being engineered to cross the blood-brain barrier. The blood-brain barrier, say that 5 times fast, to treat previously untreatable conditions, Parkinson's and Alzheimer's. Imagine having a medicine that can treat Parkinson's and Alzheimer's. You're going to have a gold mine right there, right? Because it's not just rare. A lot of people do have those conditions. And then also, if you've heard anything about superbugs, where they're like bacteria or viruses that are basically, they resist they have a lot of resistance against our drugs, our antibiotics and stuff, because they're now starting to evolve and know how to fight our drugs. So there are certain peptides that can physically disrupt the bacterial membrane, making it much harder for the bacteria to develop a resistance. So it's just another use of it. And then AI is now being used to screen trillions of peptide sequences to find the perfect fit for a disease. Speed. AI can reduce drug discovery from years to months. Imagine having to wait for years to find a drug, and now you only have to wait a few months. And then customization, which is HIMSS, they're all about it. It allows for personalized peptides tailored to an individual's specific genetic markers. It's exactly what HIMSS is doing. So in 2025, early 2025, HIMSS finalized an acquisition of a large-scale peptide manufacturing facility in California. The primary purpose is to produce compounded peptide treatments for high-demand areas of personalized healthcare like weight loss, muscle recovery, longevity, rejuvenation, hormone, and menopause. So they've already been on this since last year, early 2025, and now the FDA is finally going to start getting. They are prepared. They have all their ducks in a row. They're just waiting for the go, right? Now, by owning this facility, HIMSS aims to move away from the gray market and provide patients with human-grade, batch-tested peptides that are supervised by licensed physicians. They're going to be one of the biggest companies out there that immediately can produce and provide peptides to people with trust, right? There's not going to be all these companies out there that you can be trustworthy, but HIMSS, you can be like, oh, they do all these other things. We've seen them in Super Bowl ads and all this. Oh, well, and they do peptides? Oh, yeah. Watch. The peptide market right now is currently undergoing a massive gold rush. Over the next 10 years, it's expected to more than double, shifting away from a market driven mostly by GLP-1, right? Weight loss and stuff like that. And then it's going to be moving on to the other stuff, right? The 10-year outlook is right now we're looking at 80 to 140 billion in the current market. In about 10 years, we're looking at 295 to 335 billion by 8 to 10 years or so. So a lot can happen with the peptides in the next 5 to 10 years. Just look at the last 1 year of how many searches, right? This is Google Trends. Peptides have been on a pretty good search the last 5 years. I mean, you look at that, right? 2024 a little bit, 2025, all 2026, it's really gone up. And just even in the last 22 years, I mean, this is something that is really being seen as that people want. The GLP-1 is, a peptide, and look at what it's doing for people, right? So I consider HIMSS a buy. I'm not telling anyone to do it. You can do whatever with your money, but I do believe HIMSS is a buy if you can stomach volatility, because this thing can go back down to 20. It could. I wouldn't be surprised. I also wouldn't be surprised if it goes to 50 and never goes back down. This thing could do all kinds of stuff. I think it could go up to 40, 50, and then go back down to 25. It could do that. So just be mindful of that HIMSS is all over the place. But I think in 5 to 10 years, it will be at least over 100. I do believe that. In 5 years, over 100. So, stock market update. What's been going on in the stock market? S&P 500, all-time highs, up 12% in the last 18 days. Right? What about the NASDAQ? All-time highs, 17% in the last 18 days. And the Dow Jones, not at all-time highs, but it's getting there, 9% in the last 18 days. As you can see, it's kind of green across the board, except for some of the, health technology, not as much, but the energy and utilities, anything that's linked with oil kind of went down. Everything else really went up. The stock market is emotional. Keep this in mind. Right now we're at 62. Think about it. From 0 to 100, we're already at 62. We're at 68 right now. 62 was yesterday. A week ago we're at 36. A month ago at 20. And a year ago it says we're at 16. But there was, between that year and this month, there was a lot of extreme greed and all of everything in between. The stock market is very emotional. Just understand that. This I do trust a little bit more. This is the AAII Sentiment Investor Survey. It's interesting. You would think that people are more bullish when the market goes up the way it did. We lost 4% exactly to the neutral. And as you can see, the bears barely lost anything. They lost 0.2. But really, all the bulls went to the neutral. So even though that's not crazy, the historical average is 37. So we're still lower than the historical average when it comes to the bulls. And it's pretty interesting, right? And then we're still pretty high when it comes to the bears. We're still at 42, and they didn't go anywhere that much, right? They went from 51 to 43, but since the last week after that, nothing much. So that's kind of interesting. So last week, what happened, right? Well, the Strait reopened, right? Trump said, hey, we had this deal. Iran announced that it was completely open for commercial traffic during a 10-day ceasefire with Israel and Lebanon, which we'll go over that in a second. Crude oil prices tumbled 9 to 11% just this Friday. And then the news triggered a massive rally in airline and cruise stocks, anything linked, again, to oil. The world reacts to the Strait reopening, and the Strait reopening commercial traffic, Trump and Iran say. Again, we're going to get into that for next week's news. We're going to finish that. We also had the NASDAQ, again, hit all-time high. It completed its 13th consecutive positive session on Friday, its longest winning streak since 1992. That was very surprising. Then Microsoft posted its largest weekly gain since 2007. That's pretty crazy, right? To think. The fact that we've had the dot-com bubble, we've had all of these other times, this was after the great financial crisis, right? So, I mean, you have to imagine after the crash, things were going up pretty significantly, and yet, nope, not even after that. It was during right before the crash. So that's kind of interesting. I don't know if I feel comfortable for the next week or two. I think it's going to be either muted or go down. I don't think the market has that much more room to run right now. And then if you didn't hear, the shoe company Allbirds said we're going to pivot to an AI company. That was just dumb. They went up 500%. I don't even worry about that. The third thing that happened this last week was the Q1 earnings season kickoff with Morgan Stanley and Goldman Sachs announcing their earnings, as well as Netflix, which actually went down 10%. I did buy Netflix for one of my nieces, and I'm thinking about buying some for myself as well. Co-founder Reed Hastings is going to step down from the board in June. So people don't like to hear that, especially when it's someone who's been there from the beginning and really helped the success. Next week's news. What's happening? High stakes mega cap earnings. We got Tesla. Tesla is going to be reporting on Wednesday. Investors are looking for updates on robotaxi and the conversion of factories for robotics production. And then we have a broad sector check. We're going to check on Boeing, United Health, GE Aerospace, GE. And so we're just going to kind of get a little just wide range of what's going on. And then the market sentiment with 78% of early reporters beating expectations. Analysts are watching if these heavyweights can justify the current record high valuations. So we're going to see, after earnings, and we might need some really good earnings to keep this move going. And then a Warsh confirmation hearing and Fed policy outlook. So Kevin Warsh, he's President Trump's nominee to succeed Jerome Powell. He will testify before the Senate Banking Committee. We also have inflation and rate cut odds. So the falling in oil prices have recently boosted a probability of the rate cut. Again, it just keeps getting very emotional. I mean, of course, this is a big deal. This is inflation and what's going to happen if oil prices can come down. But you also have to think about how high the oil prices have come up. When you look at it this is going to be a grim way, right? If you were to kill somebody, right? And then you're like, oh, hold on. And then it's someone else, you just broke their leg. You're like, well, you're looking at, you just hurt someone really bad. But it's like, well, look over here. I did just, it's like the oil prices were killing us. They were killing us at 115, 110, over 100. they're just down to the 80s. We're still broken. We're still broken. Like what it was before, we're still hurting. We're still hurting, But, all of a sudden it's like, oh, well, no, like we're okay. It's like, no, like we the inflation, it's still going to be there because oil is up. But anyway, also the Fed speakers are scheduled to speak on Tuesday. So that's going to be happening. And then geopolitical fragility and economic snapshots. Basically, what's going to happen with the Strait? With the 10-day ceasefire allowed to the Strait to open last week, Iranian state media has since reported a renewed closure. Going to go over that. Retail sales data expected to show a 1.3 increase, which would be the strongest growth in a year, and signaling consumer resilience. And then flash PMIs. It's an early look at how manufacturing and services sectors are handling recent supply chain disruptions. Iran reverses course on reopening. Signals warning to the U.S. Got that little face right there. Iran reasserts control over Strait as Trump warns against blackmail. I mean, look, I know the stock market's up again, and I'm happy for it. I'm happy to see these all-time highs. I'm happy to see my portfolio doing a lot better again. I just don't know how long this is going to last. I don't want to be a pessimist, but there's just no clarity with this yet. The worst might be behind. The worst might be behind us. But I don't know. So it's going to be very interesting. We do have some earnings coming up. For HIMSS investors, Quest Diagnostics, that is actually an interesting earnings that I'm going to be looking over to see if there's anything that, because I did the HIMSS advanced blood test, but I had to go to Quest Diagnostics. So I'm going to see if there's any kind of numbers when it comes to blood tests and stuff like that. And if there, anything, right? You have United Airlines with Southwest and American Airlines. Those are all like gas fuel, right? Then we have Capital One, which we kind of give a little bit, but we already did the big banks already. Tesla, big one. That's going to be a big market mover. And then American Express, kind of there with Capital One, kind of giving us a generic, look at outlook. And then Intel, big tech company, right? So my $100,000 stock market challenge. I'm in week 46. I missed last week. I was out of town and I could not do it. So I am currently at $8,952.97. If you know anything about how this account's been doing, it is a big difference than 2 weeks ago. I was at 7,300 even 3 weeks ago, right? 6,800. That was the lowest I've been. It was bad. HIMSS was wrecking me. Everything was wrecking me, obviously. The whole market was. I went up 16% this week. As you can see, since June 2nd, when I started the goal, I'm up 21%. Now, here's what's interesting. If you take away all my deposits, the $50 deposits that I do every week, and plus the 400 extra that I did, I'm still down 15%. Right? And you're like, oh, well, this is up, right? It's up. But that's only because I've deposited. I've also been depositing. So, I've deposited after 46 weeks, that's 50, it's at least, that's what, 2,800 plus another 400, so 3,200. So I'm down a little bit, right? I'm down. 3,200, does that sound right? Somewhere around there, right? So, yeah, making deposits, consistent deposits really matters. That's where you really make your money. That's where you really get the compounding interest going, because you have to really keep depositing and growing, because when things go down, you can start buying things at low prices. I have upped my stake in HIMSS, and I lowered my cost basis. And so I've been able to do that with a couple of stocks. Celsius, I've actually lowered my cost basis. Celsius has also been damaging to me, but I've lowered my cost base because I believe so much in it, and I'm depositing every week, and so I've been able to get more stocks, more shares at a cheaper price. So yeah, $50 deposits really do matter. something I just found out about AAII. It is a Chinese LiDAR company. They charged me 10 cents twice for ADR management fee. I didn't know this. This is something I didn't know. I haven't had a Chinese or any kind of company outside the US really like this. So that was very interesting to see, and I don't know if I want to keep doing this. I don't know how much. I haven't seen this before, so I don't know if I'm going to get it every quarter or every half. But I'm thinking about selling these shares and just moving them on to something else. Maybe a Netflix, maybe just add more Salesforce, because I want more Salesforce. I do not have that much. But in the end, I ended up being down $70. Not down $70, but I spent $70 because I deposited $50, but I bought basically $50 in Oddity, and then I bought $75 in Salesforce. So I'm down about $70 in terms of how much I put in, how much I bought. Hims was my big one of the week. 36% for the week it gained. And then the other ones, my number 3 was AAII, which I think I'm going to sell. Number 2 was also TQQQ. That was up about 15%. Celsius, it's my only negative one, right? Look at this. It's the only one that was in the red for the week. I don't know why, but I'm going to take some more shares because I believe Celsius is going to be, their numbers are going to be insane this next year. Insane. And so I think Celsius has potential to hit double, to go to 70, maybe even 100 within the next year to 2. I definitely think it does. So that's going to be good for the portfolio. And so, yeah, this is what I'm doing. Like I said, I think I'm going to sell AAII. It was my 3rd best performer. I'm up 6% on it, so I'm not, like, it is what it is. I saw it at $8. I didn't make the move, and then I bought it, obviously, when it was at, my average is $21.86. I just think I'm going to get rid of it. That'd give me $140 in cash. And I could use that to buy a full share of Salesforce. Oh, no, wait, no. Not yet. It would have almost about a week or 2 ago. But yeah, thank you for watching. I really do appreciate anyone who is still watching it all right now. Please give a like and subscribe. I do. It does help the algorithm. And yeah, that's just... That's what's going on with the market. That's what's going on with my account. Let me know what you think in the comments below. And yeah, I don't know about this market rally. It's interesting. It went up a lot, and I just don't know if it has enough to keep going up. It is a midterm year. We have to remember that. These are the weakest years in a 4-year presidential cycle. So we could see a lot of volatility. But in the end, we could end up kind of going nowhere. We could be doing a lot of this, but ending up kind of staying flat. So it's going to be interesting to see where the market goes from here after running the way it did. I can't run that much. I fell down a cliff. I hurt my knee. And that's a true story. I do like to run a little bit, but I can't, I can't run like this, like the stock market has been, because it's been running like crazy. But anyway, yeah, go ahead and give a like and subscribe. Really appreciate it. Always be aware and prepared so you're not scared, because again, markets do crash. They're emotional. So if you're prepared and aware, you're not going to be scared. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.